Ms. Meng, will you be heading home soon?
An agreement struck on Friday could pave the way for Huawei Chief Financial Officer Meng Wanzhou to eventually leave Canada, where she's been holed up under 24/7 security awaiting the outcome of an extradition hearing to the U.S. Meng reached a deferred prosecution agreement with U.S. prosecutors to end the bank fraud case against her after she admitted to misleading a bank about the company's business in Iran. She attended the hearing at the U.S. federal courthouse in Brooklyn, New York, via a courtroom feed in Vancouver. As part of the deferred prosecution deal, the agreement is in effect until December 2022. As long as she doesn't break the law, the charges will then be dropped. In the meantime, Meng will be released on a personal recognizance bond, and the United States will withdraw its request to Canada for her extradition. Meng, the daughter of the founder of Chinese telecom giant Huawei, was arrested in 2018 at Vancouver International Airport and was indicted on bank and wire fraud charges. She's been fighting extradition to the U.S. ever since. Her arrest added to escalating tensions between the U.S. and China, and her release could ease some of the chill between the two economic powerhouses. Huawei has been on a U.S. ban list since 2019, preventing it from selling its telecom gear to any U.S. interest on national security and foreign policy concerns. Friday's deal only pertains to Meng. The Department of Justice said it continues to prepare for trial against Huawei and looks forward to proving its case in court. A spokeswoman for Huawei declined to comment.
The Dow and S&P 500 ended a choppy session Friday with minor gains, extending their winning streak to a third day. Gains in financial and tech shares offset a downbeat sales forecast from Nike. The Dow and S&P inched up roughly 0.1%, but the Nasdaq closed flat. Despite a steep sell-off on Monday sparked by fears of a default by developer China Evergrande, the markets recovered to eke out small gains for the week. Evergrande missed its key interest payment Thursday, but American investors took the news in stride Friday, which surprised TD Ameritrade Chief Market Strategist J.J. Kinahan.
It really is amazing. Again, going back to what I said earlier, it shows the power of the Fed on everything. That being said, I think as an investor, you can't look at what went on with China Evergrande and just say, oh, Monday, it's over, time to move on.
Nike was the biggest drag on the Dow and S&P. The sportswear maker's shares dropped more than 6%. Nike warned of delays during the holiday shopping season, blaming a supply chain crunch. Investors also took down shares of athletic shoe retailer Foot Locker, which fell 7%. China's central bank banned the trading and mining of cryptocurrencies. That yanked down the price of Bitcoin and other cryptos, as well as digital currency-related companies such as Coinbase Global, MicroStrategy, and Riot Blockchain. The global semiconductor shortage that is hammering the auto industry could end next year. At least that's what Tesla CEO Elon Musk predicts. The head of the electric car maker said the global chip shortage should be short-term. He said that new semiconductor plants that are planned or being built will have the capacity to provide chips by next year. The chip supply issue has forced automakers to slash production and sales forecasts. It's such a top concern that U.S. Commerce Secretary Gina Raimondo met with Detroit's big three automakers and chip makers on Thursday, pressing them to provide information on the semiconductor crisis.
The situation is not getting better. In some ways, it's getting worse. Truck companies, car companies have furloughed and continue to furlough thousands of workers. So it's time to get more aggressive.
Back in Turin, Musk was joined by John Elkann, the CEO of Chrysler parent Stellantis. The two agreed on potential support coming from nuclear power to cover global energy needs.
The Chinese government further tightened the screws on Bitcoin and other cryptocurrencies on Friday, vowing to root out what it called, quote, illegal activity. The People's Bank of China banned crypto mining nationwide, saying cryptocurrencies must not circulate in markets as traditional currencies and that overseas exchanges are barred from providing services to mainland investors via the internet. The PBOC also barred financial institutions, payment companies, and internet firms from facilitating cryptocurrency trading. China's central bank said in a statement on its website that Beijing will, quote, resolutely clamp down on virtual currency speculation and related financial activities and misbehavior in order to safeguard people's properties and maintain economic, financial, and social order. A coordinated move with other government agencies was the latest Chinese attack on Bitcoin and other cryptocurrencies. In May, China's State Council vowed to crack down on Bitcoin mining and trading, claiming digital currencies posed a financial risk to the world's second biggest economy. The price of Bitcoin and other cryptocurrencies immediately dropped on Friday in response. Companies involved in the world of cryptocurrency and blockchain-related activities were down as well. Coinbase, the cryptocurrency exchange that went public earlier this year, moved lower in early Friday U.S. trading.
Alitalia workers, including pilots, blocked roads into Rome's Fiumicino airport on Friday. They were protesting at the airline's imminent replacement by state-backed carrier ITA. Alitalia was put into administration in 2017 after 3 failed reorganisations. Last year's air travel slump then foiled a planned sale to investors. On October 15th, ITA will take over, but it will operate less than half of Alitalia's fleet of jets and employ only a few of its 11,000 workers. Employment terms will also be much less generous than before. That is all opposed by unions, who have demanded 0 redundancies. The Alitalia brand and loyalty program are being sold off separately. Brussels has given Italy the green light to inject almost $1.6 billion into the new firm, with further payments likely. Watchdogs also ruled that ITA doesn't have to pay back over $1 billion in illegal state aid received by its predecessor.